Live for Coaching Friday, Alex. Good
Yes.
afternoon.
Good afternoon, Veet. Good afternoon, everybody. Thank you so much for being with us today. Today is our Coaching Friday, every Friday at 2:00. So the time that you're watching this right now, if you're live with us, we go live and answer any questions you have about investing in business. We receive a lot of questions throughout the week from our readers. By the way, if you're not a reader of ours, you should go to beyondentrepreneurs.com and sign up for our newsletters. We pack it with valuable information on business and investing written by Veet and I. We get a lot of questions throughout the week about business, about investing, and we decided to do this Friday coaching because we wanted to have a chance to answer some of these questions. We also do a daily live nugget at 10 a.m. Central European time, where we just answer a small nugget of wisdom in about 45 minutes. So you can watch it every day on Facebook, on YouTube. But Facebook is a good place. So anyway, so here we are today. We're going to talk a little bit about wealth, how to actually build wealth, what it actually takes to accumulate real assets, the difference between currency, owning money, and owning real wealth. We're going to talk a little bit about that. It's something that we've discussed before. We've received a lot of questions about. So Veet, why don't you just kind of re-explain some of the things you talked about this morning?
Yeah, exactly. So, Alex, maybe let me take everyone one step back to actually the beginning of Beyond Entrepreneurs. Why are we talking about being an entrepreneur and an investor? Because we see a lot of people actually becoming an entrepreneur because it's still the best way to advance yourself in life, to actually build up wealth, whatever wealth means to you. For some it means holding a lot of money, holding a lot of currency. I'm going to come to that in just a second. For others it means a free life, as free as possible, and actually that is also what we stand for. And of course, without holding any money, it's hard to obtain a true life of freedom, unless you take a Into the Wild approach. Nice movie, by the way, but sad ending. Let's just let's just assume together that becoming an entrepreneur, if you were not born into riches, is your best way of making some money in your life. But there's a big side note we have to make. If you're not able to educate yourself financially, if you lack financial education, it will be a struggle from the beginning till the end, even if you're a good entrepreneur. And that is why we see the two being schooling yourself financially, becoming an investor also next to that. Apart from being a good and a better and an even better entrepreneur, becoming an even better entrepreneur throughout your life is probably the most direct way to true freedom in your life. That is why we do Beyond Entrepreneurs, Alex. And that is why we talk about especially those two topics. Being entrepreneur, entrepreneurial skills and fine-tuning them. And then also financial education, what to do with the money you earn, what to do with the value, the wealth you create, how do you invest it for the long term. We're not getting rich quick thinkers. We think always long term, because that's the only sustainable way of building something in life, we believe. So, but we talked this week about a small village, and I'm gonna repeat the example because it's really worth taking a deep look into it. And it is so. Imagine a village. That is the only village in the world. And just a second, because it's a little bit loud here. Just a second, okay. So there's this one village, and in the example we said it was in Italy, but it can be anywhere in the world. Let's assume for now it's in the United States. There's one village, and those are the only people alive. And those people start building the village. One is doing wood, one is doing making timber from it, one is fishing, one is making boats, one is doing the roofs of the houses, someone else is making art, it's performing on stage. And so they create a society. They create also wealth. The songs that are produced are wealth. the ideas that are produced are wealth. So wealth is never only money. So that is the first definition you have to let go of if you want to, start educating yourself financially. So this village is producing all kind of things, and everyone is collaborating, and everyone is producing things, and the village becomes more beautiful, more abundant. People get a better life because the houses are getting better. There's plenty of food because there are farmers, there are fishers, and so on. Now, because it's very hard to exchange the value they create. You cannot always trade fish into a table, a wooden table, for example. Man came up with something called money, and it was just something that needed to have certain aspects and certain qualities. And it was, of course, it had to be divisible, because, of course, let's say building a table is probably more expensive, holds more value than baking one small loaf of bread, or half piece of a fish, for example, or whatever, something small. So you need to be able to divide it. It needs to be divisible. The second, it needs to hold the value you store in it, because this wealth that was created, those songs that were produced, the loaves of bread that were baked, the tables that were made by the timberman, this was all the wealth. And next to it, they needed to put something to make it exchangeable between people, and so therefore divisible. But it also needed to hold another very important quality, and it needed to store wealth over the long time, because otherwise savers would become losers. And that is actually the big question of today, Alex. More and more people are becoming aware that the authorities that have the official rights to produce the money, that is, it used to be, for example, gold, but also seashells were used, natural materials. Seashells were a very lousy form of money. Why? Because you could just walk on the beach, grab some, and go buy something. So there was very little value. It was too easy to get access to. Gold, on the other hand, has performed its duty as money for more than 6,000 years already, for a very, very long time, and it has little chance to go away and lose its value all of a sudden. But it needs to be something that is also limited, because the wealth is growing all the time, because people keep producing things. So it's ever growing. That is not a question. That is also not a problem. So the money supply has to grow with it, but the question is, how much is it growing in comparison with where the true wealth is growing? And that is now the exact situation we're finding ourselves in, Alex. Is people are getting scared that let's say the institutions that hold the right, who hold the right to produce the currency and also take away currency from the system, are out of control.
Yeah,
they're getting out of control. They're producing today trillions and trillions of money, while not so many new wealth is generating, which by definition means that more money is chasing the same amount of goods.
Yes.
There's only one normal and logical outcome to that situation, and it is that the goods are getting more expensive.
Yes.
Whether it will take 2 months or whether it will take 2 years, in event, there's no way around it. The goods are going up, and that is what we see. So goods are becoming year after year more expensive. That's actually a small way of cheating, but understandable way of cheating, maybe, from governments and institutions that are in charge of creating and holding the currency. Is we want to let's say, if you're trying to help an economy, you want to motivate people also to spend, because if you're not spending, then we are coming into, let's say, the realm of velocity of money. Everyone will have heard the saying, money needs to move, money needs to roll, money is there for it needs to move, and it needs to move fast. And then we're talking about the velocity of money, how much people are spending in between of them. So the higher the velocity, the more people are incentivized to produce something. Because if I give you something and you're baking bread, and you're spending it immediately on, let's say, something else, a fish, then the economy is moving faster.
Yes.
Now, of course, we got a very good question today. So this is the example, and it's important to understand those basic fundamentals on how money works. So while inflation is not by definition a bad thing, inflation can be a very dangerous thing once it gets out of control. Because what they actually are trying to do with creating those trillions of dollars and euros and whatever any currency is blowing up right now, they're trying to increase the velocity. Because they assume that if you and I hold more currency, that we will be more likely to spend easier, which is, for a part, is partially true. But you have to be very careful, because once people lose confidence in the system, because it's all a trust game. If you and I believe that this small coin is worth $1 or €1 or whatever, and you believe it and I believe it, because the intrinsic value is never there. It's a piece of paper. It's a digital number on a screen or on your phone. It's a metal coin which holds no real, true, valuable metal or precious metal in it. So it's actually the objective value is nothing. So it's a game of trust. You trust and I trust that if I give it to you, let's say the $10 note, that you can do something with it, and that's the part where you trust the system. So you believe that as long as I can hold it, I will be able to spend it in the future for more or less the same. And that is why inflation needs to be kept under control, because you can agree that within a year, the same loaf of bread will be 10 cents more expensive, but you cannot accept the idea that when I give you $10, that tomorrow you will need the double amount of dollars to buy the same piece of loaf of bread that I bought today.
Yeah.
So that is where people are now on the brink of moving between trust and distrust. And so we got a question, and this is the second question from one very smart guy, apparently, who's watching our videos, is now, how do you determine the amount of currency you need to hold then in order to protect yourself from these games they're playing, if you want to call it playing, the game of inflation? So the money supply, the currency supply. So Alex, I think that's a perfect question for our listeners, our viewers, because it's something that if you're creating value, you're storing it, and you want to keep storing and building it, and maybe that is something where you can.
Yeah, absolutely. It's such a great topic, because it's something that most people don't question the value of money until it becomes a problem. And time again, for anybody who's taken the time to look at history, empires have risen and fallen, and every single currency that's ever existed has been evaporated, mostly through complete gross management by authorities. Whatever currencies exist today will disappear. It's historically accurate, and it will happen. But most people don't think that it's going to happen. There's a lot of reasons for this, but one of them is a lot of countries get into debt. Good times in the beginning, there's usually a crisis. The system resets. There is a new world order that emerges with a new strong superpower. The last one was World War II. The US dollar, the US global superpower. That lasts for some time. Everything's doing really well. Everyone's really happy. And during these good times, the first 30, 40 years, the government starts taking on debt because everything's going really well. But then a first crisis emerges, and in order to get out of that crisis, we take on more debt. But to get out of the second crisis, it's really hard to take on more debt, and that's where we are today. We have massively over-indebted government, and this is something we could honestly talk about for hours, because it's such an interesting, but also an overlooked, honestly, by most people, an overlooked fact is that right now governments are printing trillions and trillions of dollars of currency, whether that's in euros or dollars, to face this crisis, this recession. we're really not seeing any growth as a result of it, because the ability of governments to actually do something, this print money hoping it will go away, it's dead. So whatever currency you hold is going to go away at some point. What does that mean for you as an individual, as an investor, as an entrepreneur? You never want to store cash for the very long term. That's just never look at cash as an investment strategy. Like, oh, I'm going to hold cash for the next decades. It's a losing game by definition, because your money will get inflated away. Inflation, by the way, is amazing for government because it inflates the debt away, but at some point it's just not feasible and everything collapses. And it's happened, all the time throughout history. So what do you do if you actually want to hold wealth? Well, one of the most obvious things is, and this is something you talked about, Vít, is owning an asset that's actually worth something. And gold has been a store of value for about 5,000 to 6,000 years. That has held its value throughout all these different histories, where at some point when governments feel like they want to grow more, they stop pegging their currency to gold or to some physical asset, and they start doing whatever they want with it. And ultimately that currency dies away, but gold has always been with us, or for at least for a couple thousand years. So if you want to store wealth, gold is a good solution. But you might be thinking, well, I also want to own some cash, and I think that makes a lot of sense. I own cash as well. But I would say in the long term, you never want to have more than 20% of your money in cash in the very long term as a long-term strategy. Why? Because you're going to lose money every single year. Inflation every year takes away between 2%, 3%. But honestly, if you live in an emerging country where inflation is 10%, you're losing a lot more every single year equals to inflation. So you really want to make sure that you don't have a long-term cash strategy. You have your money invested in assets that appreciate in value, that produce income. Income is also a hedge against inflation. When you have an asset that appreciates in value, where the income you derive from that value can go up, then you have a winning strategy. And that's something that we teach in our masterclass. We divide your assets into two parts. But if you want to own something that is tangible, that is a form of wealth, don't own cash, because cash is not wealth. Cash is a means of exchanging that piece of paper that right now everybody believes it's worth something. But and this is not to be a doom and gloomer, but if you look at situations in places like Argentina, they're in the middle of another default. No surprise, although they sold 50-year government bonds just a couple of years ago, although they've defaulted like 3 times in the last 50 years. Or Venezuela, where in order to pay for anything, you need to walk around with a stack of bills this high. Your cash at some point is going to be worth nothing. So don't own cash as a store of wealth. Own assets that appreciate in value. Our favorite kinds of assets to own are productive assets that actually provide value for other people. Why? Because they have pricing power. If you own a stock, an example that hopefully everybody can understand is if you own a stock of Coca-Cola, you own the actual business of Coca-Cola. If prices go up in raw materials, Coca-Cola can also increase its prices. And so they have a pricing power to increase to increase their earnings along with inflation. That's why having really good businesses is also great against inflation.
And Alex, may I just put in a small question and maybe a side note there. So I hope everyone listening just really got what Alex just explained, because he just mentioned something that is so important, but he went over it so quickly. So he said, first, own an asset that holds its value. Mm-hmm. Gold can do this, but it's not productive.
Mm-hmm. Exactly.
But also, and so that can be a part, and you will maybe talk about allocation later, but so that can be something where you can store wealth, but that can definitely not be the only thing where you store your wealth, because it's not productive. So exactly. You also need to own productive assets. And then you're talking about businesses that are actually producing wealth, like imagine the village where people are producing things and thus creating wealth as well. So that is really important. So please understand that there's a distinction, and you as an entrepreneur, investor, have to make a distinction between assets that hold value, that can maintain their value. Currency cannot do this. This far we are. Now we understand this, but also hold assets that create something, that produce something, and keep producing things while still holding their value, maybe.
Yeah, exactly. And so, I think gold serves a purpose for certain people. I honestly prefer personally to own an asset that is a hedge against inflation, but it also produces income. Real estate is a good example of that. But you can own business. Real estate is a relatively more easy asset class to approach. You don't have to have a lot of money to start, but it's essentially a real asset that holds value in the real world because real estate is scarce by definition. And that produces an income. And that's really what we're looking for to create freedom ultimately, is to have an income. So if you can own an asset that is a tangible real asset that produces income, that is really the best hedge you can have, but it's also the best way to invest in cash flow producing assets that appreciate in value. And you can do that with businesses, and this is something we help people invest in businesses. We're actually releasing a new product next week where we're going to show people exactly what we're buying so that you guys can buy the same if you want. It's a very simple service. It's 4 pages you receive every month where we tell you exactly what you should be buying anywhere in the world. The absolute best assets in the world. That is, we have incredible opportunities right now in places like Hong Kong. But there are many others that we come across all the time, and we tell you about these opportunities so you don't have to do all the heavy lifting. We do it for you. And then again, we aim for high quality assets that produce income. So right now you can buy great real estate in Hong Kong, but you can do it either as a physical actual real estate purchase, or you can go out and buy businesses that own real estate in Hong Kong, and that's what we're doing. So stay tuned for that if you're interested, and we'll talk a little bit more about it maybe at the end. But really, you want to own things that preserve wealth over long periods of time and that produce income.
And therefore, Alex, so now we understand all these differences, and therefore we also understand the importance of allocation, and it's all a question of allocation, of allocating your money. What means allocation for the ones who might not know the term? Allocation is how you divide your investments into different parts. So you allocate something to, for example, precious metals, to, for example, real estate, to, for example, stocks, and in stocks there you have different kinds of stocks, dividend paying stocks, and actually other kinds of stocks. And what I definitely want to talk not this time, Alex, but what we should definitely talk about is why there is so much fuss and like the competition going on between gold, like we just talked about, and we're definitely both not against gold. You cannot be against gold. It has been proven its value and its capabilities for thousands and thousands of years now. And then the new ones, Bitcoin, the new gold. Why do you have to take part? That is, for me, a completely ridiculous game and question invented by I don't know who, but probably the ancient wealth store people, and then the new ones, the digital ones. But that is for another time, maybe. But I think that might be a very interesting talk as well, where we go into why there's überhaupt a difference and a discussion going on between the two, because they both can coexist in my perspective. But
exactly, this is something I just want to say here is gold is not a competition to Bitcoin, and we'll go into this a lot more. And I completely agree they can coexist because they serve different purposes for you as an investor. But a lot of people, unfortunately, I believe, get very political and ideological about what something's supposed to be and what it's not. You have to look at reality. What is reality, and how can you face reality so that it doesn't prevent you from actually achieving your goals? That's why both Vita and I are relatively agnostic about asset classes. We look at them, how do they serve our purpose as an investor? We don't, love something and hate something else. We just say, does it actually meet what it is that we want out of our life? But that's a discussion for next time. Maybe we can take that next Friday. For you guys who are watching, if you want that discussion and learn exactly what you can do about it, you can tune in next Friday as well.
Absolutely, because we have a strategy, and the product that we're launching next week, Alex, to close this talk, is called the Gemini Stock Investor.
Correct.
Because we're, what we are building is a Gemini lifestyle and the Gemini way of looking at as well business, as well investing. The Gemini Stock Investor will be the monthly subscription product we're launching next week. Indeed, where we mention what we buy, how we allocate, and what we follow the barbell strategy, as some people already know. Some people should go out and read the blogs and the things we send out in order to, or maybe follow even the masterclass, take the masterclass, where we explain in detail what the barbell strategy can do for your investing life. So there we share everything we know, everything we are studying, and everything our network brings to us. So that is a very exciting product, and we are going to almost give it away for free. Alex, just tell something on the price, because it really is for the people watching. It will be mind blowing, I think.
So the price for this service continuously will be is $50 a month. We believe that if you have even a couple $1,000s to invest, it's a bargain. Simply because you're going to get all the research that we do, all the research that our network brings to us, and all you have to do is just execute, and that's nothing else. But to start it off, to kick it off, we're actually going to give it away for just $10 a month for the first 6 months. So we want you to try it. We want you guys to see if you like it, if it's something that's for you. Again, $10 a month for 6 months is honestly a steal. And yeah, we hope it's a no-brainer for you guys, and we'll give you more details next week. But we really believe it's something that a lot of you guys, if you don't want to do the research, just get on board this.
Absolutely. And if you are like I was a few years ago before I met Alex, I was just, look, when I'm an entrepreneur and I'm successful, I will make all the money I need. I don't need to go into investing. I don't need to go into the stock market. I don't know so much of it. Well, the truth is, you can make a lot of money, but you will not be able to hold it. So you have to learn how to invest. That's the only way forward. And it's the only proven way, time and time again, to really build sustainable wealth. And we talk about generational wealth, Alex. So
right.
You just need to learn it. You need to get into the stock market, even if you don't like it. But you need to go in the right way. And
Exactly.
you need to go in the long-term thinking way. And that is exactly what we do. And we're happy to show you. And we hope that we can inspire a lot of people to join us on the journey. And yeah, that journey is starting next week.
So there you go, guys. So make sure to sign up if you don't already receive our newsletters. We're going to announce when we release the new product. Sign up to our newsletter at beyondentrepreneurs.com. We send out emails regularly where you get everything that we teach, everything that's on our minds, what we're looking at in the world. You'll also get access to this product. You'll get access to the discount. So make sure you sign up. And we'll see you next week for our daily live Nugget of Wisdom at 10 o'clock and for our Coaching Friday at 4 p.m.
Perfect. Thank you, Alex. Enjoy the weekend.
You too.
Talk soon. Bye-bye, guys.
Bye.